Welcome to the deep dive. Today, we're digging into some material that really lays out situations a lot of us run into with big companies.
hmm
These reports, they describe this feeling that, consumers can end up kind of disadvantaged, or at least navigating a system that feels, well, surprisingly tricky.
Yeah, especially around things like deposits, insurance, lots of different kinds, and those auto payment systems.
Exactly. So our mission here is to unpack these examples, um, look at what the material suggests might be going on underneath,
hmm
and sort of see the patterns, right?
hmm
When you're dealing with these complex, sometimes one-sided corporate rules and contracts.
Definitely. It's about exploring that gap between what you think you're paying for and what the fine print or just how things work out in practice actually delivers.
Yeah, that feeling comes through loud and clear.
Yeah.
So let's start with something common, security deposits.
Yeah.
The material talks about situations where, say, you pay a deposit online when booking a hotel.
Right.
And one account suggests you might really struggle to get that specific online deposit back. Then you get to the hotel, and they might ask for another security deposit right there at check-in.
Wow. Okay. So potentially paying twice, almost.
It seems like you could feel that way.
Hmm.
And it's not just hotels, right? The notes also mention rentals, cars.
Yeah, similar idea. You put down a deposit or maybe pay something up front. Then when you return the item, you could still get hit with charges for damage.
Damage that was already there.
Potentially, yeah, from previous renters or users. It's a real possibility described here.
Which is why the material really stresses needing to document everything. Like, take pictures, make notes of anything you see beforehand.
Absolutely. It feels like you're almost building a defense case before anything even happens.
Yeah, it really does.
That initial step, it's presented as, well, critical, because the reports suggest the system might not automatically protect you from claims about stuff you didn't do. The burden of proof, it lands right on you.
Right. Okay, so speaking of paying for protection, that maybe isn't quite what you thought. Let's shift to insurance. This is a huge theme in these sources.
It really is. A lot of detail across different types.
And frankly, it paints a bit of a concerning picture about finding out what's not covered, often too late.
That's the recurring pattern, yeah. As these accounts describe it, you realize the policy's limits after you've been paying the premiums, maybe for years.
And crucially, after you actually need the coverage.
Exactly. Like, take travel insurance.
Yeah.
You buy it thinking, okay, peace of mind covers disruptions. But the material looks into issues where paying for it doesn't mean you get a full cash refund if something goes wrong.
Like what kind of issues?
Well, the example given is weather cancellations. Your flight gets grounded because of a storm.
Okay.
The policy online might mention force majeure, act of God beyond their control.
Right.
And according to the report, even with that insurance you paid for, you might not get your money back. The company might just offer, say, a hotel room or book you on another flight later.
So you thought you bought financial protection, but you end up with maybe logistical help instead because it was weather.
That's the scenario described, yeah. Shows how specific exclusions can kind of override what you thought the main point of the insurance was.
Okay. What about renter's insurance? Property managers often require that, don't they?
They do, very frequently mandatory. But what these reports detail is how surprisingly narrow the coverage can actually be.
Narrow how? Like,
Yeah.
not obvious.
Exactly. The reports say the lease contract itself, and they note it's stated black and white, might only cover a really small amount.
Much less than your stuff is worth.
Way less,
Yeah.
potentially. And maybe only for fire damage, and only if you weren't deemed responsible for the fire.
Wait, so if your place floods from the apartment upstairs, or you get robbed, or something else damages your stuff, even though you're paying for this mandatory insurance, you might get nothing.
That's the potential outcome outlined in these documents, yeah. It really raises a question about these mandated services, doesn't it?
It does. You have to pay for it, but the protection you get could be way less than you'd normally assume when someone just says, you need renter's insurance.
Precisely. It's a bit of a disconnect.
That's a really stark example. Okay, let's talk cell phone insurance.
Yeah.
Super common. Lots of people pay that monthly fee for, 2-3 years with their phone plan?
Yeah, very common.
The material looks at what happens when you actually need to use it. You damage your phone, file a claim.
Right. And this is where it gets, well, it feels particularly complex, according to these reports. They claim that when you send your broken phone in, you, the customer, often have to pay for the shipping and the packaging.
Hang on. You pay to ship the broken phone that you've been paying monthly insurance on.
That's what these accounts describe, yeah.
Okay.
And then, when you get the replacement device, you're typically looking at paying a pretty hefty deductible.
How hefty?
Well, one example given is paying $400 on what's maybe seen as a $700 replacement phone cost.
$400
Yeah.
out of $700. That's more than half the cost.
Right.
And that's after paying all those monthly insurance fees.
Right. And the notes point out this deductible is often based on the phone's original price, not what it's actually worth now, maybe years later when it's depreciated quite a bit.
Wow. Is there any reason given for why it costs the customer so much?
The material mentions that sometimes the explanation involves companies claiming people are abusing the system. That's cited as a rationale.
So the insurance that seemed like a good safety net when you bought the phone, it ends up being surprisingly expensive and maybe a hassle right when you actually need it.
That's a picture painted by these accounts, yes.
Okay. And the material then shifts a bit, but stays on phones, talking about how long they last, or rather how quickly they might become obsolete.
Yeah, product longevity. Or, as it's often perceived, planned obsolescence. It suggests that phone manufacturers might effectively make older models outdated through software updates.
Software updates making a phone obsolete. How?
Well, the material indicates these updates can slow the phone down, maybe hurt battery life, or cause issues with new apps working properly. And it also explicitly states that after about 3 years from when a model was released, the security updates and the major software updates, they just stop.
So a phone that's maybe just 2 or 3 years old might stop getting critical security patches or features, making it less safe and maybe less useful over time.
That's what the reports claim, yes. And one detail highlighted as particularly concerning
What's that?
is that these older models, the ones that aren't getting updates anymore, are apparently still being sold, sometimes by third-party sellers.
You're kidding. So someone could buy a phone today that's already near the end of its software support life or even past it.
That's the situation described, yeah.
That feels like a pretty big hidden catch, doesn't it? You
Yeah.
buy something thinking it'll be good for a while, but the essential support might just vanish sooner than you'd think.
It definitely raises questions about transparency, transparency about how long a product is really expected to be fully functional and supported.
Right. Okay, let's move to what might be the most impactful and potentially devastating area covered.
Oh.
Auto and home insurance.
Yeah.
Especially after natural disasters.
Yeah, this section really drives home that theme of discovering limitations when it's far too late.
How so?
The material highlights that people often only find out what their policy doesn't cover things like flood damage or tornado damage or wildfire damage after the disaster hits, and they try to make a claim.
And there are specific examples of this in the material. Painful ones.
Very specific, yes. It describes people in California, after wildfires, finding out their homeowner's policy either denied the claim completely or only paid out a fraction of what was needed to rebuild.
Wow.
And it gives similar examples from other states, Florida, Tennessee, Texas, Arkansas, where people hit by floods or tornadoes discovered only after losing their homes that their policy didn't include flood coverage or maybe specific types of wind coverage.
So they've been paying premiums maybe for decades,
Yeah.
thinking they're protected,
Yeah.
believing they have coverage for their house, their biggest asset, only to find out in the absolute worst moment that the very thing that destroyed everything wasn't actually included in their policy.
That is precisely the scenario laid out. The reports really emphasize this discovery happens far too late. And what's striking is, these disasters happen in different places at different times.
Right.
But the same issue, this gap in coverage being discovered after the fact, keeps coming up again and again across the country. The material even points out that news reports might cover these stories.
Yeah.
Highlighting denied claims after a hurricane or something, but then the same pattern seems to just repeat itself somewhere else later on.
It paints a picture of
Yeah.
maybe a systemic issue where crucial details about what's not covered are somehow missed or obscured or
Yeah.
just not understood by the person buying the policy until they need it most.
It certainly suggests a significant disconnect between the policy details and what people commonly understand they're getting, leaving them incredibly vulnerable.
Okay. Let's switch gears slightly to auto payment systems. Market it as convenient, right? Set it and forget it.
Supposedly, yeah. Avoid late fees.
But the material suggests this convenience can actually backfire and lead to unexpected fees because the systems are too rigid.
The specific problem brought up is the company setting a fixed due date for that auto payment withdrawal.
Okay.
The report uses an example, like a cell phone bill being automatically charged on the 23rd of the month.
Right.
But crucially, the material notes the customer often can't change that date. And the 23rd might not line up with when they actually get paid, say, if they get paid on the 1st or the 15th.
Ah, so the autopay tries to pull the money before their paycheck actually hits the bank account.
Exactly, which first off can trigger late fees from the company trying to get paid.
Right.
But then the material adds another layer. It claims that banks might not stop that scheduled auto pay, even if you have overdraft protection set up.
Wait, the bank might let the charge go through anyway, knowing it'll overdraw the account.
That's the assertion made in the documents, yeah. So the payment attempt happens, there isn't enough money.
And boom, overdraft fee from the bank.
Potentially, yes. An overdraft fee from your bank, possibly on top of the late fee from the company whose bill it was.
So the system that's supposed to be easy, autopay, could actually set up a kind of trap, caught between inflexible company billing dates and banking rules, leading to extra fees you never saw coming.
That's the risk these reports are highlighting, definitely. Shows how that lack of flexibility can turn something helpful into, well, a penalty.
All these different examples we've talked through, the deposits, the different kinds of insurance with their hidden limits, the autopay issues they seem to build towards a bigger point the material makes about a fundamental imbalance.
Yes, exactly. This is where the reports kind of synthesize it all, describing this core disparity and how obligations seem to work.
How so?
The material sums it up pretty starkly. When it's the customer's turn to pay, especially with autopay or mandatory fees, they have to be on time. Miss a deadline, often an immediate automatic late fee kicks in, no questions asked.
Okay, strict rules for the customer. But what about when the rules are reversed? When the customer needs something from the company?
That's where the imbalance comes in, according to these reports. When customers need the company to, say, fix a billing error or process an insurance claim fairly or just provide the service they've already paid for, there's often no guarantee the company will act quickly or sometimes even fulfill the obligation at all. Instead, the reports claim, corporations can lean heavily on complicated contract clauses, exceptions, fine print.
Disclaimers.
Exactly. Disclaimers to avoid paying out or to delay fixing things.
So it feels like immediate penalties for the consumer, but lots of wiggle room and outs for the corporation.
That's the imbalance these documents describe, yeah. And it leads to this feeling of being, well, left alone, right? Trying to navigate these really powerful systems by yourself. The material even suggests a perception that maybe government bodies or regulators aren't focused enough on these specific kind of everyday consumer problems.
And this brings us to a really powerful and honestly pretty devastating story that the material uses to illustrate the absolute worst-case outcome of all this.
It's a truly gut-wrenching example, yeah. It describes someone who did everything right, for years and years, paid their mortgage on time, paid their car insurance, their homeowner's insurance premiums, never missed a payment.
Right. Diligent.
Totally. Then a disaster hits, and they lose everything. House, car, all their belongings inside, gone.
And despite paying faithfully all those years,
they find out right then, in their moment of absolute greatest need, that their insurance coverage is denied. Or maybe they only get a tiny partial payout that's nowhere near enough.
Oh, man.
The report stresses that feeling of all those years of premiums just wasted, utterly pointless, and the potential end result described. That person is left with maybe just the clothes on their back.
Starting over completely.
Completely over. Maybe at age 55, after working and paying into the system their whole adult life.
That's just incredibly hard to imagine.
It is. And the material is very clear. This isn't just some theoretical possibility. It explicitly states this kind of thing happens. And maybe the most chilling part. The same types of policies, with these potential gaps and exclusions, are still being sold right now as you're listening to this.
And try to fight it in court isn't a sure thing either.
The material mentions that, victims might sue, they might go to court, but it notes that winning, getting a favorable verdict, it's not guaranteed, which just highlights how tough it is for an individual against these huge systems.
So putting this all together, what does it really mean? This deep dive into the material, it shows this consistent pattern, doesn't it? Across all these different interactions, deposits, insurance, auto pay, navigating corporate policies, the contracts. It can feel incredibly difficult. And these reports highlight how people can end up really vulnerable, sometimes without the protection or the service they thought they paid for.
Yeah, and often finding out about those limitations only after a problem hits.
Right. It underscores this stark contrast, doesn't it, between the, often immediate automated penalties customers face if they slip up and the kind of flexibility or the extensive disclaimers and exceptions that corporations seem able to use, which can lead to huge losses for individuals, even if they've paid consistently for years.
That's the core tension described, yeah.
So here's where it gets really interesting. We focus today on the individual experience, right? The specific stories and situations laid out in the reports you provided, showing how these issues play out on a personal level.
And it raises a really important question, doesn't it?
Which is?
Well, given how complex these systems are and the potential for really devastating outcomes, like that story we just discussed,
Yeah.
and that feeling of facing it all alone without clear ways to get things resolved, what are the bigger implications? What does it mean for society when individuals seem to carry the full weight of understanding every single word in these long, dense contracts while facing such huge risks and maybe having very limited ways to fight back?
That's a powerful question to leave things on. We really only scratched the surface of the specific point